I'm actually quite optimistic over the next 24 months, or at least defining as the near term, about the prospects for healthcare. In particular, I think we just went through a phase where we saw unprecedented levels of leverage applied to healthcare services companies, where in the past they never supported such leverage. And candidly, I think the argument, and the jury's still out, but I think the data is going to prove that a lot of these companies shouldn't have had that much leverage. And I think fundamentally there was a lack of discretion being used, whereby bankers were always making the debt available. And I think a lot of these investors, and to Ben's comment earlier, a lot of them driven by people who saw the last 5 years as being phenomenal times in healthcare, not making the important distinction between how much leverage can be used and how much leverage should be used. And I think as a result, that brought up asset prices to all-time highs. If you look at the average price paid in healthcare services last year by private equity firms, it was 13.5 times EBITDA. And you compare that to the 15-year average, it was about 8 times, 8.5 times for services. And so you've got to imagine that a lot of that extra 1 or 2 turns of valuation were really prompted by these unprecedented levels of leverage. So in many ways, I think this debt slowdown is a welcome respite for us, because we did think a lot of these, we sat on the sidelines, and somewhat frustratingly, where we saw great businesses that moved to an auction and were saddled with these capital structures. And I think what you're going to see is over the next 12 to 18 months, there's going to be some great buying opportunities, as I think coupled with reimbursement changes, which is going to put some real pressure on these significant capital structures. So from that point of view, I'm optimistic from a near term. I think from a reimbursement point of view, hopefully there'll be better alignment. I think historically there's been a gross misalignment of long-term value or pay for performance with short-term reimbursement arbitrage opportunities. Take private fee-for-service as an example. Good in concept, but that's probably going to be a target coming out, whatever administration comes out of this thing, over the next 24 months. And I think you see overinvestment in a lot of these areas at the expense of maybe finding long-term. So hopefully CMS and Congress will come up with a more consistent view as to these are the types of principles we're going to reimburse, and more transparency and pay for performance is going to be a great driver of that ultimately. In terms of where GA has been spending our time, it's still pretty scary. I don't think the prices have reset in healthcare, at least in our experience, looking at a lot of the sellers and investment opportunities we're seeing in the US. And that'll come. That I think will come with time. So what we've been doing is, in addition to staying close to the US, is spending a lot of our time internationally. The majority of our portfolio is outside the United States. And from a healthcare point of view, it actually provides a nice counterbalance to some of the cyclical dynamics that we're experiencing here in the US.